Good morning. It's Wednesday, July 9th. From Zach Hour. Here's morning market update. That's from the notebook. Today, what are we looking at? To pick up on our themes from yesterday's presentation in terms of hardest money out there and what is happening in regard to the fiat system globally, not just in the US. We talked about the US yesterday and focused on Japan and how potentially the yield curve control history we've seen over the last 5 years in Japan carries over into the US. It's not just the US, it's not just Japan, it's all these G7, G20 nations, really. They're all playing the same game, the fiat game. And the UK. The UK is having kind of a issue with their bond market. The higher that yield goes, the less demand it is for capital going into those long duration UK bonds. Okay. The UK government services the ability for its deficits through that bond market, just like Canada, just like all these different nations, because there's not enough capital wanting to go there to bring the yields down lower. Not investors, capital. Capital is forced into these products because of a pension plan, insurance company, an endowment. They have policy that they need to buy something that's risk-free, like a government bond, which is ludicrous in today's world. But that's what's happening. And we have 30-year gilts, that's what they're called in the UK, breaking out to this 5.45-ish level. 2022 had a Liz Truss moment where the bond market freaked out and she lost her job as the UK leader. But nothing's happened there quite yet. However, if you fast forward to what eventually needs to happen, the yield curve control will come to all these nations because of the math. It's just the math, which, let's go back to the US here for a second. Great book, When Money Dies. If you haven't read it, study it. It profiles the hyperinflationary times in Weimar Republic, which led to World War II, the Nazis and all that coming to power. Not saying we're going there anytime soon, but the themes are similar. You see peak fiat money, peak fiat society in the Western world, a lot of breakdowns that really relate back to that time during the Weimar Republic. But this is a chart of the big, beautiful bill BBB and the impact it's going to have on deficits going forward previous to the bill, those orange lines versus the blue line. Like I said yesterday, left, right, blue, red, none of this matters. All this political theater, teams, it's all BS. It's still the fiat money machine. Some will spend the money faster than others, and it's just an acceleration and debasement here. With these levels, the real purchasing power of the fiat goes faster here. The inflationary tones will accelerate into Q3 and the rest of the year and going forward. I love this chart. It really demonstrates the long-term picture. There's no getting away from this trend. This is the system. But it's good for risk assets. Inflation is going to build up into other assets like the stock market in these higher beta trades that I keep talking about. You want to get long of inflation, you can complain about it, or you can kind of play the fiat game. I talked about yesterday how Metaplanet in Japan is taking advantage of that same game. Hugo Steins back in the Weimar Republic was industrialist. He kept borrowing in fiat money that was depreciating rapidly to buy assets that would go up measured in fiat. The BlackRock ETF, I bet, the most successful ETF of all time, continues to have record inflows. 700,000 Bitcoin now in assets under management into that ETF, and it continues to be a catalyst for tailwinds into Bitcoin. Bitcoin price today, higher lows, higher highs, very strong signal here, just a couple percent off all-time highs. Cool article yesterday seen on Bloomberg, Tether, which also relates back to the hardest money theme here, has a $8 billion pile of gold sitting in its Swiss vault. Pretty incredible. It continues to stack fiat and then put it into harder assets, Bitcoin, gold, etc. We are in a bullish regime, and it's that backdrop of the fiat money machine, the stagflation, the acceleration in all this is going to pick up. And the next couple of weeks here, from a seasonal standpoint in the stock market, are bullish. traditionally. I see stronger signs in my notebook for higher lows, higher highs across the bullish trend in the U.S. equity markets. Because opportunities to get long and stuff if you're not with these tariff headlines. But remember the game we're playing against. This is a crazy stat, but look at those three companies now: Meta, Microsoft, and Nvidia combined $9.4 trillion in US fiat dollar market cap. Those three companies kind of leading the way where technology, the world, and markets are going. The market's trying to price in what the value of these companies are. But these three companies continue to make higher highs, higher lows, all-time highs here today in those three companies. The big weighings in that S&P 500, the index, they're over 10%, those three combined, so they're going to push the index higher. But look at those three companies' market cap value as it relates to G7 nations' GDP. Pretty incredible. 1.8 times what Japan is. Canada, 4.2 times. Those three companies, everything in Canada, those three companies have a market cap currently higher than that. Food for thought today. Hope you got something out of it. Give me a subscribe and like. Give me a comment. Have a great day, and we will see you tomorrow. Cheers.